In today's video, we're going to be discussing whether the buy-to-let market has lost its appeal to professional and traditional investors. So the buy-to-let market is different in the UK as it is in the US, but I'm going to particularly focus on the buy-to-let market in the UK. And it's of particular interest to me because one of the things that I was looking to consolidate within my investment portfolio over coming years before I turn 40 was to look at generating a property portfolio of £1 million by the time I'm 40, in addition to the income that I earn through business and through other income streams. Over the past few years, the amateur buy-to-let market has taken a considerable hit. And the reason for this are tax changes and the implications of those for normal amateur buy-to-let landlords. And what I mean by that is there has been an increase in stamp duty of 3%, which is a surcharge now applied to investment properties and properties bought as second homes. There has also been, over the past 5 years, a transition from interest relief given to personal investors of buy-to-lets, where they could taper the full tax relief against their income and therefore reduce their corporation tax or reduce their income tax liability, which has now tapered off to the maximum 20% relief. But in addition to that, what it may mean is that actually you must declare a higher income because you're not allowed to offset the level of interest against your actual profits, and therefore it increases your income because your costs and expenses are less, and it may push you up into the higher tax bracket, which again has the knock-on effect of increasing your tax bill overall by pushing you from 20 to 40%. And then if you couple the last thing with the transition of a lot of investors moving to investment through companies, which means that ultimately you'll pay a corporation tax, and you can actually, as a company, if you take out a loan, offset the full amount of interest against your expenses and reduce your profit. That is squeezing other amateur investors out of the market. So not only have you lost 3% of your investment because your stamp duty's gone up, you've lost your tax relief rate at a higher band because you can no longer deduct the interest as an expense. And in addition to that, you're going to have a higher tax bill of 25% if your earnings are over £250,000. Does this mean that buy-to-let market is dead, or does it mean that it's no longer a valid structured part of a portfolio that can generate you a healthy return? Now, to look at that, we need to look at what your expected returns were. The beauty about investment properties is it allows you to invest in an asset class that is appreciating. So you leverage money with the bank, which means that they will loan you the money, and that safeguards your finances against inflation because the property goes up at a similar or a higher rate than you would expect of inflation, and therefore the money in the property grows, but you are also servicing the interest from the bank by the individual landlords paying for that rent. And therefore, effectively, you're using others' money to grow an inflated asset base while retaining cash flows and income. The overall implication for normal investors is that it is still an attractive proposition, but you need to become more sophisticated in your operations to ensure that you're minimizing your tax liabilities. And therefore, those that have more money, which is what we know the system is moving to, a more favored approach for those higher, wealthier and affluent classes of individuals, which is just unfortunate the way that the world seems to be going, with the likes of Jeff Bezos, Elon Musk and all the other individuals seeing vast sums and growth in their wealth, when a lot of people are losing their jobs and unable to afford paying the bills or being able to just secure simple employment. So if you're still looking to invest in properties, there is still a market, but you'll need to be more well-read, you need to be more sophisticated in your operations, and ultimately you're not going to see the level of returns that you would expect pre-2016. If you like this video, give a like, drop a subscribe, and leave a comment below on what topic you would like me to talk about in the next video.